Thanks everyone for joining in. Let's get going. Why we are here today. Simply put, we want to do justice to our role as industry analysts. We have come together to share our perspectives on the future of the BFSI industry. As we reflect on the past 5 years, I think definitely a lot of market volatility, rapid technology advancements, perhaps I would say most importantly, a profound shift in the way we have seen BFSI firms to be thinking about their business and technology operating models. The pace of change has been unprecedented, and today we aim to reflect on what's working, what's next, and then what's evolving, right? So we hope that you're as excited as we are to explore the forces shaping the future of BFSI. The panel today, it comprises four analysts that are aligned with the BFSI practice at Everest Group. I'll start with the best one of the lot, Pranati Dave. She leads our BFS IT services and technology research practice. She's a lead SME on everything related to capital markets, open banking. Next, we have Suman Upadrashta, very well known for his storytelling abilities. Suman leads all of our BFS business across IT services, technology, business process services. And then we have Sahil Chaudhary, true believer of our global delivery model. He's joining us today from Dallas. He's best known for covering maximum set of territories across our BFSI practice. He leads our insurance ops practice, closely tracks the CXM services space, lead analyst on lending and mortgages. And then we also have me. I'm a partner at Everest Group. I've largely been living and breathing insurance industry for the last 10 years. I lead our insurance industry focused research and advisory practice, again, cutting across IT services, technology, and business process services. So, what are the discussion points? What's the agenda? It clearly, yes, it looks like a packed agenda, but yeah, we'll try to do justice to this agenda. We'll start by setting the stage with the key structural headwinds, tailwinds shaping the BFSI industry. We'll dive into the biggest change drivers that are set to transform, what I highlighted earlier, the business and technology operating models. We definitely don't want to limit this as a theoretical discussion, so we'll explore how these forces are converging into real enterprise actions backed by some concrete examples as well. And then post that, we plan to address the $1 million question. Well, in this case, it's rather a multi-billion-dollar question that is sought, or that is the clarity that our service and technology providers seek. What's the opportunity size? How is it evolving? What are some of the emerging opportunities that should be prioritized as part of the go-to-market plan? So we'll talk about that, and then we'll examine the shifting technology provider landscape. Rather than literally just sharing the landscape, we want to discuss the blurring of lines between what we have seen as the traditional core systems and then the process technology providers. And finally, we'll wrap it up with some key takeaways and critical questions that we believe the provider community must address to capture the growth opportunities in this evolving practice. Yeah, so that's what we have as part of the agenda. Next, I'll do what I do best. I'll pass it on to the best person whom we have. I'll use my superpower. Suman, why don't you get us started and quickly cover and talk, share the context on the BFSI industry.
Thanks, AJ. We have seen that the global economy is experiencing heightened uncertainty due to various factors, right? Economic volatility, geopolitical tensions, climate risks, and regulatory changes. Now, all of these are impacting BFSI enterprises in multiple ways. And you can look at it as both opportunities and challenges for the enterprises. Like in the subsequent slides, we'll go through them. But what immediately we can see is that enterprises are having increased financial risk due to fluctuating interest rates, inflationary pressures, liquidity concerns. Then there are tightening financial regulations, There is a lot of scrutiny related to financial crime, which is coming in. Enterprises must continuously adapt to evolving compliance requirements. Then there is geopolitical and supply chain disruptions impacting the cross-border transactions. There is, like I mentioned before, rise in financial crime, especially related to digital transactions and the criminals using advanced tech to now defraud end customers. Then there is change and evolving customer expectations coming in, which is also due to the fact that they have more access to multiple banks and fintechs, and they have now understood what a seamless transaction would be. So they are expecting more and more out of that. There's a lot of catastrophic risks and climate related changes coming in, which are impacting insurance enterprises and the service providers alike. So overall, we see a rise in operational costs for enterprises. There's a lot of focus on risk management and continued technology investments needed to safeguard themselves against rising threats of cyber and financial crime. AJ, I think.
I think you're on mute.
Yeah, I'm sorry for that. Let's keep moving. Yeah.
Sure, thanks. However, it's not all gloomy. In the recently concluded survey which we had done, enterprises remain largely optimistic about their business growth in 25 despite the uncertainty. And what we've seen is that 80% of them express optimism in some form, 28% highly optimistic, 52% somewhat, and 16% maintain a neutral stance. What we believe is that the positive outlook suggests that enterprises anticipate resilience and opportunities for expansion. It is possibly driven by the strategic investments, the digital transformation initiatives, and adaptive market strategies. We have also seen the cost and margin pressure as a priority remaining the top business challenge, and it also reflects the ongoing economic uncertainties. Then we have seen that adapting to evolving customer needs and a slowdown in demand continue to be significant concerns. The regulatory challenges, I think, have climbed from sixth to fourth place, indicating the rising importance and growing compliance pressures. So enterprises need to navigate these challenges through strategic cost management, regulatory agility, and customer-centric innovation.
Thank you, Sumin. I do want to believe that there is good resonance in terms of the messaging here and what the audience believes. I'll pass it on to Pranati and Sahil to cover the next page, the more interesting part, which is essentially the mega forces in the BFSI industry.
Yeah, thanks, AJ. Now if we look at the kind of rapid evolution of next, heralded by next generation compute, or everything as a service, 5G, 6G, IoT, edge computing, micro production, it's sort of fundamentally reshaping industries across the board. The financial services industry is also undergoing a similar profound transformation driven by some of these technology. Just to give more perspectives, if you look at quantum computing, it's being explored by the larger institutions, the likes of JP Morgan Chase. They are looking at it to enhance portfolio optimization, to create more guardrails around their risk management. Similarly, AI accelerated computing, that's enabling real-time frauds. The everything as a service, that is also revolutioning banking through banking as a service. Yes, it's sort of allowing a lot of fintech firms to leverage traditional banking infrastructure through APIs, in making it more cost effective. Adoption of 5G, 6G, IoT, that is again creating a further push towards real-time transaction processing. It's sort of reducing the latency, ensuring more seamless instant payments and settlements. Edge compute is again playing a very critical role in terms of fraud detection, cybersecurity. Similarly, we are also observing, if you look at microservices and micro production, they are sort of redefining the way financial products themselves are structured. So it's breaking down those traditional monolithic systems into much smaller, nimbler, independent services. I think all of this modular approach is sort of enabling faster innovation, more customization. It's allowing the banks to deliver very tailored financial solutions to adapt to specific customer needs. I believe, Sahil, you and I were speaking a lot about how these trends are shaping up with the purview of data and customer experience as an area. Over to you to share your insights on those.
Thank you, Pranati. So, talking about data and intelligence. So, the next buzzword for 25-26 is DIE. Like, not the DIE die, it's DAAI die. It's data, analytics, automation, and intelligence. So, that's the keyword for all the people who are there in the audience today. Uh, Now, if we talk about banking, financial services, and insurance, the DIE is growing at 17 to 19% CAGR as per the latest study done by Everest Group, which is highest amongst all the other verticals. Now, you can understand how important and how fast this DIE is growing in the banking and financial sector. However, for all the people in the audience today who are from the banks or insurers, you'll see your peers are in different stages of die maturity. The bigger enterprises, the bigger banks, bigger insurers, they are moving towards more experience-driven initiatives. Whereas you'll see your peers, which are who are in smaller or mid-tier banks or insurance are moving towards more efficiency-driven approach, building basic data analytics and automation capability. So those two are in different stages of maturity. Now, in the audience, if people are from the service provider community, the big opportunity is in understanding where the banks or insurer is and then help them move towards the next stage of the DIE revolution. That is the big opportunity for all the service providers community. Plus, somebody who can able to do that with the lowest cost possible would be the ones who would be emerging as the winners in the next 2 years. Um, in terms of the evolving CX demands, everybody would agree that customers nowadays are focusing more on quick responses, easier digital platforms, personalized services. I myself just delete all the apps where I don't like it. If I don't like it fast, easier, I just delete the apps. Uh, which is why you see all these banks and insurers are investing in personalization, omni-channel support, in digital transformation. Some examples, one of the very big insurers, Allianz, they deployed AI in customer service. They had their own app, but they just revamped the entire app to build it more user friendly. Similarly, there's another insurance company called Lemonade. I just love the name. Uh, which is why I'll bring Lemonade again and again. Um, they are using AI to customize their pricing and underwriting to offer more personalized services to their consumers. So as we speak, these changes are happening, uh, and that will keep evolving for the next 1.5 years. Thank you, AJ. Over to you.
Thank you. This was great. Awesome. So I see some neat set of industry specific nuances. Thanks for sharing them. Now, I think what will make this real, right, is really look at the convergence of these different mega forces. See how the different combinations are expected to drive new investments, newer kinds of initiatives by BFSI firms. So let's explain this with a few examples, right? Suman, do you want to take this one?
Sure, Ajay. I think Sahil did a great job in setting the context. What we are seeing in the data and intelligence space is that the enterprises are moving beyond the traditional analytics towards generative data intelligence and autonomous intelligence. Agentic AI being the buzzword now, going to take over a lot of the previous automation and combination of that with AI per se. And enterprises are leveraging data to drive strategic initiatives across their portfolios and not just the operational efficiency part of it, which I touched upon. And due to that, we see demand from the enterprises in terms of seamless data integration, looking at the entire data space which they have, cleaning it up, integrating all these silos which they have accumulated over time. The buzzword being legacy modernization, reducing that data debt and tech debt, enabling real-time AI decision making and hyper-personalized financial services due to this seamless data integration, right? And building AI on top of that. The enterprises are focusing on greater efficiency, security, and compliance. So whatever insights are being generated are driven to satisfy the regulatory concerns, and also making it difficult for customers to get defrauded, or the suspicious activities happening. The initiatives like Bank of America's Cash Pro or PNC Bank's data sharing partnership with Plate. Then we have on the insurance side, Swiss Re partnering with Palantir Foundry. All these examples only validate our conviction that enterprises are gearing up to infuse AI in their solutions, right? To enable better risk management, faster decision making, and enhanced customer experience. And we see this only picking up over time. So I'll quickly move to Pranati to help her share some light on next gen compute.
Thanks, Suman. And again, all that you were alluding to around how fast-paced the AI revolution has been, it sort of underscores the acceleration or the accelerating adoption of quantum compute and data-driven advancements. So if you look at quantum compute, it's sort of poised to revolutionize areas such as portfolio optimization, by tackling complex, high-dimensional problems within sort of challenging the existing classical computing methods. Traditional portfolio optimization is sort of involving a lot of balance expected returns against risk across diverse asset classes, as we understand. So that task itself becomes very computationally intensive. Now, if you want to add an AI layer to it, it's going to be very crucial that we build our build capabilities around quantum algorithms as well. There are several industry examples, and this is one area where we're seeing a lot of ecosystem collaborations happening. We've seen Goldman Sachs and AWS explore quantum algorithms, around several areas. And again, there's sort of potential advantages over the classical approaches. We've also seen cities, innovation labs, and classic partnership. JPMC is also exploring quantum computing in their, managing some of these complex financial problems around index tracking, around financial module framework. So this is something which is happening at a very rapid scale. And at the same time, if you look at how the quantum hardware, it continues to advance, on the flip side, what we are seeing is, despite this potential, the adoption in financial services, there are facing several hurdles. There are technical limitations, there's a shortage of skilled talent, there are integration challenges, and again, you are in the BFSI space, so there are security concerns, and there is regulatory uncertainty. So navigating through all of this is again becoming a lot of a challenge. So when I'll pass it on to you to share a view on how things are evolving in the CX space within the insurance area.
Yeah, I'll take that one, Pranati. So,
Yeah.
Real data-driven insurance integration is everybody would, if you're from the insurance domain, you would agree that the next revolution in the insurance is coming from the data-driven insurance integration. It is creating more personalized, efficient operations. It is creating a responsible approach to insurance. The usage of big data, ML, allows insurers to offer more tailor-made solutions. I'll again take examples. Progressive and Allstate, they are using telematics, if I remember correct, for their customers to offer more personalized service, more personalized usage. We call it as the UBI. Again, second, Lemonade, they are using AI for real-time claims processing. Let's say if you click a picture of the damage of your car or your home, it can assess that image and process that damage pretty quickly, as compared to the old-fashioned 4 or 5 days it used to take. for claims to be processed. The third major, I believe that benefit of this data-driven insurance integration is targeted marketing. The challenge with all those, the challenge with insurers where they were not able to find the right customer and what exactly to pitch to the right customer. So using that data-driven insurance, it helps create marketing, more targeted marketing campaigns as per the behavior or the life events of the customer. Now, while we are talking about insurance integration, the embedded insurance comes to fore, where you see all the voice chat, chat bots, phones, emails, these insurers are using these platforms to communicate. Then this is what you see now, but then the world is moving towards that invisible insurance, as we call them. People in the audience, as you might be booking your flights through booking.com or Expedia, and then the annoying insurance that comes in between, which adds to your flight ticket, that is the kind of invisible insurance that comes in. Or you buy your fancy phone with an Apple phone or a Samsung or whatever phones, and then you see those insurance products that is being offered there. Those are where the insurers are seamlessly trying to bring that insurance where the customers are. And then the next phase where we talk about the next 4 or 5 years, as AJ was alluding to, the next is dynamic context, where it would be more about seamlessly focusing on where real-time data. Let's say if you wear a fitness watch, the insurers can quickly assess what is your health data, and then they can offer customized health premiums as per that. Or let's say if you have if you're using a car, then it could assess your driving behavioral patterns and then can offer a more customized auto insurance based on that. So that is where the world will move in the next 4 or 5 years. And then the implication to the service provider communities are understanding where the insurers that are, and then helping them to move to the next set of evolution in would be the next big opportunity for the service provider community in the CX and insurance space. Back to you, AJ.
Thank you, Sahil. I think that was perfect. We can covered good ground, examples across multiple themes, multiple lines of businesses as well. And see, we do understand that there are just so many BFSI enterprises, right, who are seen, who have acted as early adopters of next generation technologies, right? Still a largish or a dominant portion. I would say even they are just fast followers, right? Even the industry front runners are largely fast followers, right? So what we've seen is that where this has evolved a bit, the pace of change has gone up. There is definitely more openness, and much beyond just openness and willingness to drive the change agenda. And at the end of the day, we are passionate analysts, right? So would love to stay bullish on the enterprise mindset and see how this unfolds from here. So I know we've been doing most of the talking so far. We want to make sure that our audience is glued in. So we have a poll question for you, right? How prepared is your organization to address the major forces shaping the BFSI industry that we just discussed? Option one, observing and planning future strategies. B, driving innovation to adopt to these forces. C, partnering with third-party providers for solutions, mitigating risks associated with these changes, or they're still uncertain about the way ahead. Now would be a good time for you to kind of participate, really showcase where the consensus lies. I honestly don't believe that there will be a true consensus. Would love a dominant portion to be around driving innovation, moving beyond just the planning phase. But let's see how it unfolds. Any comments, Sahil, Suman,
Yeah.
any of you? What do you think? Where will we land?
Yeah, if you were doing this webinar in January, I think as planning dominates in January, I think the first option would have been dominated. But as we are moving along the year, I think it would move towards more driving and partnering and mitigating.
Any different votes? Any different Opinions, Suman, Pranati, one of you?
I think I'm
So as
bullish
an
on the
optimist,
yeah,
same,
please go.
same. As an optimist, I'd say we are evolving at a fintech speed. We are sort of ready today. We are learning tomorrow, and we are sort of innovating by next week. And that's what I hope to see.
Right, I think the tech spend of enterprises have been up there. So even I agree with Pranthi in terms of the driving innovation being a key sort of area, which I think the enterprises are focusing on. So yeah, I'm optimistic about it.
Okay. Awesome. So I think we have the results. Beautiful. Not a I won't say that we have a consensus, but I'm really glad. In fact, we all are glad that nearly one third of all the votes are on option B, which is driving innovation to adapt to these forces. So this is great. Hopefully, the next time when we connect on a similar topic, it's we in fact don't need some of these options, and we are talking about where do we lie, where do the BFSI enterprises lie in that maturity continuum for addressing these mega forces and moving ahead in their transformation journey. So thanks everyone for participating. This was great. I'll keep the momentum going. And let's move to the next piece, right? Again, I think I mentioned it. I mentioned it earlier. We want to explore the outsourcing services market opportunity and the emerging demand shifts, right? So, what have we seen? Here's a picture, here's a chart. As analysts, we love to have data. We focus a lot more on data and the data cuts and the beauty of those data cuts and slices. What is shown or presented over here is how we have seen the outsourcing and the offshoring, penetration to be evolving. So the from in between 22 to 24, and what do we expect, going forward? So that's it. With the context that we shared so far, right? There's strong reasons to believe that the deceleration that we saw in the BFSI services outsourcing market the last 2 years, that has definitely bottomed out. And we do expect a good recovery from the next quarter. What we have observed over the past few years, the outsourced BFSI market, that was getting delivered, let's say, from the onshore locations versus the offshore locations. Both of these markets nearly grew at a similar pace. This was also attributed to the way enterprises conceive their BCP plans. There was preference to kind of keep parts of operations closer to the core functions post COVID. But then the current elevated inflation levels, the onshore cost levels, they have pushed back, these BFSI firms to turn to offshoring. We also highlighted earlier in the Enterprise Pulse survey, right? The big agenda item for enterprises is profitable growth. Now, this translates into a triple mandate for BFSI firms: run efficiently, change incrementally, and then I would say manage securely, right? So there is a triple mandate, and enterprises need to balance their investments and their agenda pieces, their focus, their efforts across these three. Now, the big challenge that lies in kind of addressing this mandate, this is around driving the velocity of change. And for that, a dominant portion of BFSI firms, they need to look beyond their enterprise boundaries to support this agenda at speed, at scale. And for that, for those particular reasons, we definitely foresee the outsourcing services and the offshoring levels to rise even more dominantly in the business process services segment. Yes, there is a base effect involved purely if you look at the outsourcing penetration compared to the ITS or the technology services segment. There is a big delta, and the base effect also plays in. But what we believe is going to pan out more prominently is that with increasing sophistication of these business process services work streams that will leverage the latest technology advancements, the industry is expected to witness a boost in offshoring levels too, wherein there's a need to access scaled, specialized, cost competitive talent, right? Now, the message to our provider clients, I would say follow agile planning principles and ensure that the go-to-market efforts align really well with high growth segments. And while we are consistently trying to defend our portfolios across some of the stagnant or let's say low growth segments. So for instance, on the BFS side of the house, we do believe that payments and wealth management sub-segments, they are expected to grow at a superior pace. On the insurance side, if to cut it, if I have to dissect it, in the non-life, the PNC insurance segment, we we foresee specialty insurers to be doing really well. The small commercial insurance segments, insurance businesses to be paying, to be kind of driving more of these scale transformation efforts. And on the L&A insurance side of the house, group life and benefits, they are expected to achieve higher than market average growth rate. So how do we align ourselves with these high growth segments? That becomes important. Secondly, the big need for, I would say, proactive efforts in terms of identifying what are these greenfield opportunities, what are those areas wherein there's still an opportunity to carve out an early mover advantage, right? And we would love to talk about some of them in terms of what we foresee to pan out. So I'll pass it on to our panelists to cover what are some of these uh, greenfield outsourcing, offshoring opportunities that we foresee in the next 24 months.
Yeah, AJ, let me start first with what we are seeing in the the cyberspace. So if you look at the kind of rise cyber threats has had, the focus on digital transformation, regulatory pressures, we've seen providers and enterprises. It's sort of a significant opportunity in terms of advanced security solutions to financial enterprises. To financial institutions and as well as to some of these regulatory bodies and governments. AI powered cybersecurity sort of driving a lot of use cases around real time threat intelligence, automated incident response, behavioral analytics. So we've seen all these use cases shaping up. The rise of security as a services are another paradigm. We are seeing a lot of outsourced managed security services constructs emerging in this space. The next, I think, would and I know it's one of my favorite topics is around how do you achieve data monetization. So banks are increasingly monetizing data. They're looking at enhancing services and unlocking more revenue streams for them. They are sort of analyzing a lot of these transaction patterns, customer transaction patterns. They're offering personalized and hyper personalized financial products, customized loan offerings. So it's happening across the retail, commercial banks, all and as well as the asset and wealth management space as well. Again, all these strategies are demonstrating how banks can transform data into more actionable insights and more revenue generating opportunities. And that's where I believe it could be a very big opportunity for providers to create a mark over there. I'll pass it on to Suman and Sahil to share more perspectives on fin crime, DAI, and some of the other areas that we have here.
Yeah. Thanks, Vijay. I can take up the fin crime and the design parts of it. What we're seeing is there's a rise in financial crime, like I mentioned before, with advanced tech lying in the hands of the fraudsters and suspicious criminals, right? So from that perspective, banks and financial institutions are trying to become more sophisticated in terms of the fraud detection and AML capabilities. And what we're seeing is that they're trying to invest in AI-driven risk management, real-time fraud detection, and automated compliance solutions. There's an also uptick in AI ML-based remediation strategies, which is essential for enterprises to combat financial crime effectively. The FinCrime space cost is quite cost sensitive in the sense that it's enterprises spending a lot of money on this and they want to keep the cost of compliance low. So the challenge for enterprises is to rely on a partner ecosystem which would help them achieve that. And that includes partners across advisory, operations, and tech, helping them solve this challenge. On the customer experience and product innovation front, we see psychographic-based banking emerging as a key trend, leveraging behavioral insights. Like we covered before, hyper-personalization being that end state. Additionally, front office digital transformation and AI-driven product development is crucial in meeting evolving customer expectations. So enterprises are trying to navigate these. Balancing regulatory compliance with seamless personalized experiences, integrated front and back office experience, enhancing both the customer and employee experience, that is. So enterprises are looking at solving all these problems with the help of their partners. Over to you, Sahil.
Yeah, thanks, Suman. I'll quickly talk about the under-penetrated micro verticals and data and AI. So, um, in case when we look at outsourcing, there are multiple greenfield areas which has not been outsourcing much in the past, but that is expected to change in the present and near future. Some of the areas, if the providers can identify and then can try to support the enterprise community, that is where the opportunity and growth looks like. And even for the enterprises, as some of your peers are already also starting to use third-party providers for some of those, it becomes uh, you can actually take a leaf out of the book and see if that can also be the enterprises can also look at outsourcing some of these. Some of these includes the intermediaries in insurance, the MGAs, the agencies, and the brokers. That market was not uh, getting outsourced quite a lot, but now as we see the rise in outsourcing for MGA, especially in the year in 2025-26, where we see more of private equity money flowing into that market, you see the growth of MGAs to be upwards of even 20-24%. And as they look to kind of answer their cost pressures and all, you see a lot of net new outsourcing happening from the MGA space, the agency space as well. On the banking side, if you look at the real-time payments that is happening around right now, like the Fed nows, the one of the major underpenetrated verticals right now in payments, where there's an opportunity for for um, for supporting in the Fed now implementation. And as these real-time payments come to fore, there the other set of opportunity is more regarding the regulatory reporting, which is the SEPAs and others of the world. So there are a lot of opportunities out there, which were not our which were not there in the past, which can be explored. In terms of the data and AI section, as I talked about it earlier, hyper personalization, as the bigger banks and the bigger insurance are moving towards hyper personalization. I can take one publicly known example. Let's say JP Morgan Bank is trying to um, is trying to test one product, which is, I think, in partnership with Whataburger. Like if I just walk into a Whataburger store and if I can just take a burger, the money gets directly deducted from my account. So that is the sort of hyper personalization that those big banks are looking to. And if the provider community can support on this, that is where the opportunity would lie. Similarly, in terms of fraud detection, as Suman mentioned earlier in the webinar, that there is a lot of fraud and the fraudsters are becoming smarter. Uh, the services being offered has also becoming smarter in terms of real-time fraud detection. If the providers can figure out how they can support the banks or in terms of real-time fraud detection instead of reporting those after 24 hours, that was the next set of opportunities in the market. AJ, over to you.
Thank you, Sahil. And thank you, all my fellow panelists. Next topic that we wanted to discuss, this massive evolution that we are seeing in the BFSI technology provider universe. Why we're saying that there's a big evolution? The sophistication has improved, the coverage has gone up, the number of options that are available for enterprises, even for very granular segments, that has definitely gone up. But then I think we all know that. What we want to cover today is how we are seeing, I would say, invasion of territories in between what used to exist as two different segments, the core technology providers and the process orchestration technology providers. That's what we want to discuss. But then again, before we do that, we want to ensure that all of you are with us. So yes, time for the next poll, right? Same guidance. I think you should see the voting buttons. What's the question that you're trying to get your response on? What are the key challenges that BFSI firms face in adopting the latest technology advancements? Right? Is it the budgets? Is it the lack of technology infrastructure, data quality issues, ecosystem partners that can enable it, data privacy and security concerns, or is it more of a talent related acute issue? Okay, so what's the consensus this time? Do we have a consensus here amongst the panelists?
Yeah, I think AJ, I'll try to guess first. I think it should be the second one in terms of tech infrastructure and data availability, as I think a lot of banks and insurers gather a lot of data, but that data is like a garbage data. You have to clean that data up. So if you don't have clean data which they can use either in their uh, for their LLMs or in terms of using their analytics, it becomes of no use. So I still believe that quality data availability should be one of those challenges.
Okay, that's fair.
I
Any
think,
other opinions? Yeah, go ahead.
AJ, I think having been a CIO before, I think I agree with Sahil in that way in terms of lack of tech infrastructure. But I think the challenge is also around data privacy and security concerns, especially the regulators having a keen eye on all the banks and financial institutions, especially the ones who are without a large banking license, right? The fintechs and so on and so forth. I think their utilization of customer data to monetize it in ways of violating privacy, I think that's a challenge which regulators are facing to implement. PG, any thoughts?
Yeah, this question is definitely a tough one. So I would also feel that, I also feel that it's between the two of these. It's around the second, where we are talking about the readiness in terms of data and infrastructure, as well as the concerns around security. I think these two are sort of the ones.
Okay, perfect. I think we do have the results, and I want to assure everyone that this is not fixed. We are not voting as well. But then, yes, more than 40%, 42% of the respondents, they believe that it's the technology infrastructure um related, I would say, maturity and the data quality issues that is hindering them to kind of leverage the latest technology advancements, followed by data privacy and security concerns. And then again, the cost concerns and the talent issues, they kind of jointly take the third position. So good. I think we are doing great in terms of not just talking about what we believe the future of the industry is, but also capturing the pulse. So thanks everyone. I'll keep us moving. So yeah, Suman, as I said, I think the more important points around how we see the technology provider landscape to be evolving.
Yeah, I think AJ, like you alluded to before, we see the space shifting a lot and this amalgamation happening between core and process technology providers. I think for me personally, this space has been very interesting to track. And what we have seen is that the evolution of core and process technology providers has traditionally been a unidirectional journey where the core tech providers focused on the like automating foundational enterprise functions, and the process technology ones focused on sitting on top of these core systems and offering value-added services, primarily to enhance operational efficiency. So with the recent shift, what we are saying is that core technology ones are increasingly expanding into the process stack, and they're actively developing and integrating process technology capabilities. I think PJ and I were discussing about this holistic specialization coming in, and the providers looking at achieving this holistic specialization, right? Especially in very specific domain areas. What this signals is a fundamental change from a layered approach to a more integrated and intertwined model. This is actually very beneficial for enterprises who will end up taking the benefits of this coming together. But what we see is that core tech is evolving to incorporate process automation and intelligence, while process tech providers are embedding domain-specific core functionalities. Both of them making it more competitive in the broader enterprise technology landscape. We see low code, no code providers like APN, ServiceNow, Salesforce. They are no longer just enablers of process automation. They are building, like we discussed before, domain specific functionalities. But I would leave it to you, Pranati and Ajit, to explore more BFSI use cases and see how this is playing in context of BFS and insurance enterprise.
Yeah. Thanks, Suman. I think let me give a view of on this very interesting research that we did end of last year. We focused on looking at how does the core banking provider ecosystem, technology provider ecosystem looks like. We're seeing it continuously evolving. North America is sort of leading the market share. However, we are seeing a lot of deal activity happening in the EMEA region. Hyperscalers are playing a very crucial role in driving the modernization charter. AI, ML, data analytics, they're sort of becoming mainstream. I think the panelist here, Sahil, talked a lot around what AI really means, AI really means. And we observed that 54% of the providers, they're sort of embedding these capabilities into their offerings. Additionally, 76% of these providers, they're partnering with SIs. So it's sort of reinforcing the crucial role that Suman, you were alluding to, of system integrators in driving successful core banking transformation. So just to summarize the future of core banking, what does it look like? Winners in the core banking space, they will need to act as orchestrators. We will see modern core banking systems, they follow sort of a Lego based approach. Regulatory challenges, they are going to be there, that will keep creating that kind of a challenge, and this is going to evolve constantly. And last but not least, we have to monitor how AI translate and how it unlocks new possibilities in terms of reshaping the front office experiences, enhancing customer engagement. AJ, over to you to give more context around insurance as an area.
Yeah, before I do that, I think one of the I would say next steps as part of this webinar, for folks who have joined in, if you are interested in accessing these research artifacts, we have done this. We have compiled these landscapes across core banking, across LNA insurance, across PNC insurance. So yeah, if you are looking to access excerpts of this research, or you want to connect with some of our lead analysts, lead authors of these reports, that could be the next action item that we can look to accomplish after this webinar as well. So for getting back to what Pranati mentioned, so she talked about the core banking technology provider landscape and how it's evolving. I'll talk about a different tangent, and I'm using an insurance example over here. Guidewire, right? I would say one of the leading core PNC insurance focused technology provider. So yes, there is this big opportunity, but as an insurer, while you look at Guidewire or even similar other systems like a Duck Creek, an Insurity, a Majesco, more as a core processing engine, there are a lot of added features, functionalities that exist that insurers will need beyond the core technology. This will be your ancillary tech stack. Think about it. If you are looking to enter newer segments, you want to go deep on the emerging risk, whether it's climate risk, crypto risk, cyber risk. There are these unique solution technology providers. And by the way, the logos that you see on this page, more than 75% of all of these logos, these are affiliated Guidewire solution partners. So that, I would say, out of the box integrations exist, right? So as you invest in core technologies, yes, I would say that might not be the starting point, but yes, that's a big leap that you have to take. But then beyond that, how do you make sure that the core landscape and the ancillary tech stack comes in together to accomplish the specific outcomes that you need, right? So think about it. You might have, let's say, from a claims perspective, you might have a claim center from Guidewire, but then you would also want to enable, I would say, payments across all the digital channels that exist. And for that, you might need, and that capability or those functionalities might not inherently exist in the core processing engine. So you might want to look at what are some of those, providers like a OneInc or a Snapsheet that are available with those blueprints that integrate really well with the Guidewire tech stack. So there is a core modernization market, and then there is a core augmentation market that also needs to be seen in parallel. So that's wherein I would say, I think what also becomes important is, as an SI, as a service provider, how are you not just thinking of the right set of partnerships with the core technology providers, but also the partnerships with these core augmentation technology providers? And how do you think of orchestrating these business outcomes? Because that's wherein the value lies. How can we talk about the value equation? How can we drive that value? How can we govern the success on an ongoing basis? Signing up those partnerships is, I would say, the first step. But then looking at the different combinations and then proactively advising your clients around how will this ecosystem work together to address the unique challenges that you have, at the same time not create legacy for the future in terms of building a big SaaS sprawl that there are 9 different cloud technology environments and 5 different low code technology environments. So yes, you have to balance the risk of, I would say, underutilization, but then choosing the right technology stack so that we're not building a legacy for the future. That becomes extremely important. So in the same research that we did, we also looked at not just what these leading 50 core technology providers are, but who are the SIs who have partnerships with the maximum number of these core technology providers. As I said, again, having those partnerships is the first step, but then how do you orchestrate these to accomplish the outcomes? I think that's the bigger step, and that's where the value lies. That's how you position yourself as an advisor, as a strategic partner, and not just a vendor. Right. So I think that's the big change that needs to be seen. What I'll do next is, we've covered a lot of talk tracks around how we see market forces to be shaping the future of BFSI. What does the opportunity size look like from an overall outsourcing market perspective? The technology landscape, how is that evolving? Where we would like to summarize and kind of call out some of the key takeaways. What does this really mean for the provider community? Sahil, over to you for your magic.
Thank you. Thank you. This is my favorite part of the webinar where I get to ask questions instead of answering them. How wonderful. On the serious, more serious note is some key takeaways should be in form of questions that the audience should ask themselves. And you don't necessarily need to have the answer now, but it's for them to digest and then think about your next move based on these questions. So the 4 pillars and the 4 questions are number 1, vision. Now, as the enterprises, the banks, the insurers are innovating continuously to deliver value, as we talked about personalization, hyper-personalization, data, CX, and with now the platform op models as well, is the service provider community in sync with the innovation that is happening on the banks and the insurer side? The more you are aligned, the better chances, or let me put it this way, the providers who would win would be the ones who are more aligned towards the vision of the future that these banks and insurers have. Second, I want to talk about talent. As now we're getting more into the specialized skill frame, let's say in terms of FCC, in terms of those real-time payment, as AJ and Pranati was talking about the next generation technology and the CX. I think the differentiation or the value proposition in the near future will not be about, okay, hey, we're giving a FT-based cost approach, or I'm the cheapest vendor, etc. It would be more towards your talent. Do you have the right talent to even support your clients? And then that will be your number 1 key differentiator. So are you hiring the right talent, or are you upskilling your current workforce to be more competitive in the market. That could be your differentiator vis-a-vis your peers. Third, sourcing. Now, a lot of times or let's say previously the third party providers used to think about the GCCs, or let's say this way, the GCC heads used to think about the third party providers as their competitors, but that vision is changing as we have now witnessed more deals where even the third party providers have partnered with GCCs in terms of working together more collaboratively over few processes. We call it as the BOT, the build, operate, transfer model. Now, instead of looking at each other as competition, you should think about synergies where you can support each other. That is where uh, the next value would also be seen. And third, and not sorry, the last, the capabilities. It's always the question of capability. Now, as the mid market, both in banking and in insurance, is growing, we have seen the outsourcing from this segment starting to rise. Are you uh, customizing your capabilities to the specific asks of these mid-tier banks? As the mid-tier banks have started their journeys of digital transformation from 2025, it will come to 2027. They have very specific, unique needs as compared to their larger peers. Now, do you have the right capabilities and the right uh, advisory capabilities to even support them in their endeavor? Once you start answering and thinking, and you start thinking about these questions, probably you will start moving towards the right direction of creating value for your clients. Thank you. AJ, back to you.
Thank you, Sahil. So I think those were, the question. That was the content that we had planned. But then, from a Q&A perspective, I know there is just limited time left. But I do see a question from someone who has asked, can you share some examples of core tech and process tech providers? While I do understand that this would have come in a few pages earlier, our apologies for missing that, or let me say my apologies for missing that. But then what could be some of these providers, right? So see, I'll take an insurance example. So everyone like a Guidewire or a Duck Creek or a Majesco, these think of them as core technology providers, right? Process tech providers, someone mentioned a few of them earlier. For example, folks like an Appian or a Mendix or an Uncorp, these are process technology providers, right? But a lot of them, but then the point that you are making around the convergence piece, if you look at the forward looking strategy for a lot of these core technology providers, the way they are defining a lot of these value additions, they are facilitating third party data sets, they are facilitating services around AI capabilities, etc., which is kind of again moving beyond the core engine. And then a lot of these process technology providers, they have built so much domain specificity, right, that in a way they can work as pseudo core systems as well, right? So that's the convergence that we highlighted earlier. I hope that answers your question. I hope that clarifies, and I understand we have just 1 minute left, so I would give that back to everyone. Thanks everyone for joining in. I hope you like the conversation. If there is interest in exploring any of these themes, please feel free to write to us. More than happy to engage and collaborate going forward.